In this video, I'm going to share with you 5 strategies to increase your GIS benefits, your guaranteed income supplement, by up to $100,000 or more in retirement. Now, GIS, or Guaranteed Income Supplement, is a very generous government benefit. At its maximum, it's worth well over $10,000 per year for individuals and couples, but it is quickly reduced by GIS clawbacks. GIS clawbacks can be anywhere from 50 to 75%. Any taxable income, CPP, RSP, RRIF withdrawals, pension income will reduce GIS benefits by 50 to 75%. So for example, if you took $1,000 out of your RSP or RRIF, you would see your GIS benefits go down by $500 to $750 the following year. GIS clawbacks are very important. Now, with a few strategies, we can reduce the effect of GIS clawbacks and we can increase GIS benefits by up to $100,000 or more over the course of a plan. Now, my name is Owen. I'm an advice-only financial planner, a CFP, and I'm the founder of PlanEasy.ca. PlanEasy.ca is a platform that you can use to build your own financial plan, including GIS, Guaranteed Income Supplement benefits, and you can work with one of our advice-only financial planners to make sure that you get the most out of your government benefits in retirement. When trying to maximize the Guaranteed Income Supplement, there are a few important factors that we want to consider. And one is, do you own a home or are you renting? If you're renting, we need extra cash flow to support monthly rent payments. If you own a home, this can make it a little bit easier to maximize GIS. So that's one important factor to consider. The other important factor is, do you have any annual pension income? So if you even have a small amount of pension income or a large amount of pension income, this can make it much harder to qualify for the Guaranteed Income Supplement. The third factor is, do you have assets in a LIRA, so a locked-in retirement account, a LIF, a life income fund, an RSP, a registered retirement savings plan, or a RRIF, a registered retirement income fund? Any assets in these accounts can make it more difficult to qualify for the Guaranteed Income Supplement, and if these accounts are too large, that can make it very difficult. So that's the fourth factor, is what's the size of these registered accounts? If you have $200,000, $300,000, $400,000 plus in registered accounts, it gets more and more difficult to qualify to maximize the Guaranteed Income Supplement. Now, the fifth factor is, do you have any RSP contribution room available? This is an important strategic planning opportunity in regards to the Guaranteed Income Supplement. If you have RSP contribution room available, this can make it easier to maximize the Guaranteed Income Supplement. And the other factor is Tfsa Contribution room. TFSAs are tax-free. They don't impact the Guaranteed Income Supplement. If you have a lot of TFSA contribution room available, this can actually help increase the Guaranteed Income Supplement in the future. Now, there are other factors to consider. So for example, do you have any other sources of income? Are you eligible for, do you receive the CPP survivor benefit? These are just a couple of examples. I would highly recommend building a detailed financial plan using a platform like PlanEasy and working with one of our advice-only financial planners, because these factors are so important when trying to maximize the Guaranteed Income Supplement. Now, I'm going to introduce the 5 strategies that you can use to get the most out of the Guaranteed Income Supplement. But because of the complexity behind this type of retirement planning, we're going to release one video each day over the next 5 days that goes deeper into these 5 strategies. So make sure you like and subscribe this video and hit the little bell icon so that you'll get notified when those new videos come out. Let's take a look. Now, there are a few strategies that you can use to get the most from the Guaranteed Income Supplement, GIS benefits, and increase your GIS by up to $100,000 or more. And the first strategy that we want to look at is typically starting CPP at age 60. So CPP is a taxable benefit, and it has a direct impact on how much GIS you receive in the future. The idea here is that we can reduce the amount of CPP being received if you start CPP earlier, and you can actually set that money aside if you're still working in a tax-free savings account at TFSA. Now, the second strategy is that often we want to look at winding down RSPs or any sort of registered assets before the age of 64. So if you're in your early 60s and late 50s, we actually want to look at drawing down your RSP before you are retired. And this can be a bit counterintuitive. We are going to trigger some extra income tax by making these withdrawals, but the benefit is that we avoid GIS clawbacks later on in retirement. Now, the third strategy is between age 64 and 71, we can look at making strategic RSP contributions. An RSP contribution is a deduction on your tax return. It lowers your taxable income. And because taxable income, line 23600, is used to calculate GIS benefits, we can actually get the maximum GIS for a period of 8 years if we use this strategy. Now, this is a very complex strategy. It requires quite a bit of planning, and we don't want to over contribute to the RSP. So we need to plan this very, very carefully. Now, the fourth strategy is to quickly draw down any remaining registered assets in RSP, RRIFs, LIRAs, or LIFs after the age of 72. So after age 72, you have to convert these accounts. They will start minimum withdrawals every year, and we want to avoid those minimum withdrawals after age 72. Instead, we want to draw down whatever remaining assets are in those accounts in 1 year, or perhaps 2 or 3 years, depending on the size. Now, the last strategy is that you can, when you start the guaranteed income supplement, you can request that that first year of GIS benefits be based on current year's income, so this year's income. So rather being based on the previous year when maybe you had employment income still, you can have it based on the current year's income, which for many people will be quite a bit lower. So if you employ this strategy, you can get more from your guaranteed income supplement, and you can get up to 12 months of payments that normally you wouldn't receive because your previous year's income would have been much higher and you wouldn't qualify. Now, don't forget to like and subscribe and hit the little bell icon. We're going to come out with one video each day over the next 5 days, going deeper into these 5 strategies to maximize your guaranteed income supplement. These strategies can be quite complex, so we're going to look at a case study and we're going to look at how somebody can increase their GIS benefits, guaranteed income supplement, by up to $100,000 or more over the course of their plan. So don't forget to like and subscribe and hit that bell notification so that you'll get notified as soon as that video comes out. Thank you for watching.